Okay guys, this is lecture 4. This is lecture 4, Fibonacci retracement only. This is lecture 4, Fibonacci retracement, part 1 of lecture 4, Fibonacci retracement. Part 2 of the lecture 4 will be held on Thursday, same time, 6 a.m., which will be Fibonacci expansions, whatever you want to call them. So Fibonacci retracement is today and Fibonacci expansions are on Thursday. Understand, guys? Say yes. Guys, once I finish this lecture, I'll send you the recording of this lecture in the London session, and also I'll send you the recording of another Fibonacci retracement lecture, which I gave to the FIP group. I'm sure most of you have already watched that lecture. Yes? So you guys would have to go back and watch these both lectures together just for your better understanding. I'll teach you. I'll be more in detail on this lecture. Okay, guys, let's start. Let's commence. Everybody's here. Everybody can see and hear. Say yes. Say yes if you can. Okay, guys. First of all, Fibonacci retracement. What is Fibonacci retracement? What is this tool is? Guys, Fibonacci retracement and expansion tool are support and resistance levels. Yes. One is these are support and resistance levels. Agreed. Support and resistance levels. Yes, but the question is, this tool, why do we use this tool? Anybody can tell, anybody. I give you the hint. The hint is in the name of the tool. Fibonacci retracements and corrections, guys. Tell me. Anybody can tell me, why do we use this tool, guys? Okay, you've got a gun, 5 guns. If you have like 5 guns, you need to know exactly which gun is for what purpose, right? So tell me, why do we use Fibonacci retracement or correction tool? Tell me the reason. Try to understand the reason, because if you don't understand the reason, useless. The tool is useless. You will confuse the tool with other things. Excellent, Sharon. Excellent. What did I say? The answer is in the name. Retracement. Why do we call it retracement? What does retracement or correction mean, guys? Tell me the meaning of it. My first language is not English, guys. Come on, you tell me. Yeah, it retracements. It is retracement tool. It checks the retracements. Something which checks the retracements or corrections. Understand? Yes, it checks how much a price can retrace, a price can correct, right? Understand, guys? So Fibonacci retracement is the tool which we can use to see how much the price can retrace or price can correct. Understand, guys? 100% understand. Guys, what I've just said is the most significant and important thing in this lecture. What I'm saying, you need to know why do we use this tool, guys. Do not confuse this tool with other tools. Guys. Retracements is only used. Fibonacci retracement gun is only used when you want to see the retracement, how much the price can retrace. Only for that purposes. Only for that purposes. How much the price can retrace. Guys, I'm saying it again and again. The reason is this is the most significant factor, because that is where the people confuse it. How much the price can retrace. Understand, guys? How much the price can retrace. Are we clear on this? 100%? Everyone clear on this, guys? Say yes. I want you to understand completely this lecture. I wanted you to, by the end of the lecture, everybody say yes, we understood completely. Anybody has any questions? Okay, great. Now let's focus. Let's move forward. Now, I said this is a tool which we can apply it, which we can apply in our trading to see how much the price can retrace. Now, of which the retracement will be. The question is, I said the price can retrace, right? But retracement of what? The next question arises, retracement of what, right? Retracement of what? Can anybody answer this question? We use the tool to check the retracement. That's what I said earlier. Now the question is retracement. The next question arises. The next question. Okay, but retracement of what? Yes? No impulsive lag, no. Anyone? No. Okay, now the price movement, these are very vague answers. Now I'm going to explain it to you. Now, guys, before this, remember the price moves in legs. No, absolutely wrong. Listen this. Price moves in legs. Understand, guys? What is leg? This is leg. Price moves in legs. Right? Have you ever seen how this is how the price moves, right? You guys agree, right? The price moves in legs. Now I'm going to show you what leg is. Now each of this is leg. Make sense? Guys, does it make sense? Tell me if it makes sense. So price moves in legs. All of these are legs. Now, what did I say? We use Fibonacci retracement tool to check how much the price can retrace. Retracement of what? Retracement of a leg. Do you understand what I said? Retracement of what? Retracement of a leg. How much the price can retrace? Of what? Of the leg. Of the leg. Do you understand this? What I said so far? Everyone understands. Say yes if everybody understands. Zan, you understand? Zan, do you understand? This is very important. You need to be clear. Okay, I have a tool to check the retracement, but where to apply the tool? You apply the tool on the leg of which you want to see the possible retracement. Do you understand? You apply the tool on the leg of which you wanted to see the retracement levels. Make sense what I said? Guys, what I'm saying is the most important thing out of all this lecture. If you understand what I'm speaking right now, trust me, it's a piece of cake. Do you understand what I said? You know, this confusion will finish that where is point A and where is my point B. This confusion will finish. You know, people have this confusion where to start and where to end, where to start, where is high, where is low, stuff like these, right? People have the problem. Now if you understand what I'm saying, you will never ask this stupid question. Now, do you guys completely understand? Fibonacci retracement is the tool to check the retracements. Retracements of what? Retracements of legs, because price moves in legs. So you can use this tool on any leg to see the retracement. Understand, guys? You can apply this tool on any leg to see the possible retracement levels of that bloody leg. Understand, guys? Everybody understand? Boston, you understand, right? Exactly. Leg. And guys, trust me. Listen to me what I'm saying. From the leg, I will take you into this. Leg is the same concept we use while trading harmonic patterns, while trading Elliott waves, guys. So I'm building you on this. I'm not going to teach you all of that, but remember, bloody leg. Whenever you see your leg, remember leg. Everybody see their legs, please. Just a feel of it. Yeah, come on, guys. I don't want you to forget the word leg. Yeah, Khan, touching is not advisable. Come on, you need full concentration. Please, touching is not advisable. I say just see it. You're exaggerating now. It's not. You can do it after finish the lecture, but not during the course of the lecture. It's highly inappropriate. Understand? Everybody is with me on this. Yes? Okay, now move forward. Shall we move forward now? Great. Now let me give you example. If this is the leg, let me give you example of the legs, guys, on the charts. This is a leg. Guys, that is a leg. That is a leg. Can you see? That is the leg, right? That is the leg. That is the leg. That is also a small leg. Can you see this? This is also a small leg. Major leg is this. Make sense? This is a leg. That is the leg. So first of all, before you use this tool, you need to identify the bloody leg you want to take the retracement off. Understand, guys? Do you guys understand? Manish, you understand? Sharon, Gerard, Boston, Khan, Zain. Focus, guys, with me. Focus. I need full attention here. You want to be a trader? Listen. Nobody will give you a lecture like this. Trust me. Nobody gave me a lecture like this, guys. All of these are legs. So before we even start using the gun, we need to know where to apply the gun, right? And where to apply the gun is on the leg. So identification of the leg is the point one. Yes? Agree? Agreed, right? You can't apply the tool if you don't know the leg. Great, great. Let's move. Everybody totally understand what the leg is? Let me show you the legs. This is a leg. That is leg. That is a new leg. That is a new leg. That is a 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 leg. Khudayar, how are you, brother? That is a leg. Do you guys understand completely what the leg is? If everybody understands, say yes. Okay, just to brief what I spoke earlier, Fibonacci retracement is a tool which we use to check the retracement, to see the retracement, to see the retracement. The next question is retracement of what? The answer is retracement of the legs. What is legs? I said the price moves in legs. The price moves like this, guys. These are legs. We use Fibonacci retracement tools on these legs to see the retracement levels of these legs. The leg of, if you want to take out the retracement level of a specific leg, I take out the leg and then apply the tool on it. Take the leg, apply the tool on it. Take the leg, apply the bloody tool on it. Understand, guys? Say yes if you completely understand and are with me on this. And Khudaya, do you understand what I just said? Everyone, I want you to be with me on this. I've just started Khudayar. I've got a recording on this. Very easy. Even if somebody hasn't attended this lecture, once you see the recording, trust me, you will have no questions. Everybody understand so far? Yes? Shall we move forward now? Okay, great. Now, how do you apply this? This is the leg, guys. The first question is, where does the leg begins? The leg always begins from where you want to take the retracement from. So this is the leg, that is where it begins and that is where it ends, right? This is point A, guys, and that is point B. Everybody's clear. So that is a leg. Understand? Sorry guys, I have to move it like this. Everybody's clear, right guys? So this is a leg. Now let's say we want to take the retracement of it. Retracement means if the price has risen from, sorry guys, this is A and that is B. If the price has risen from the bottom to the top here, right? From A to B, how much the price, if we want to take out that how much the price can retrace of this leg, how much the price can retrace of this leg. Make sense guys? How much the price can retrace of this leg. Understand? Retracement will be from B to the downside guys. This is called retracement. Correction, retracement. So we want to see how much the price can retrace to the downside, and to take out this retracement levels, to take out the retracement levels, we use Fibonacci retracement tool. Understand guys now? Do you guys understand completely? So how do you apply the tool guys? Very simple. Take out the Fibonacci tool guys. Start from where the leg begins and end from where the leg ends. Understand guys? If there is a wick, you will start from a wick. If there is no wick and it is the body, you will start from the body. I'll show you the practical examples in a second, but before that, just try to grab the concept of it. Are we clear on this? I started from where the leg begins and I ended where the leg ends. Simple. Beginning and the end. Beginning at the end. Understand guys? Erase the confusion out of yourself. Beginning at the end. So the price take out the retracement levels guys. Can you see the retracement levels? Now these are the retracement levels guys. 0%. It begins 23.6 Fibonacci. 38.2 Fibonacci. 50% means half journey of the leg, right? Understand guys what 50% is? Half of the previous of the leg. Then 61.8 Fibonacci guys, 78.6, 88.6 and 100 guys. Understand? 100 means a complete retracement of the leg. Look, complete retracement means complete retracement of the leg. 100%. Make sense guys? So are we clear on this completely guys? Are we clear on this completely? 100%. Khudayar, Boston, Zain, Khan, everyone. Okay, let me show you the practical example of implementing the retracement tool guys. Let's say first identify your leg. Let's say the price rises. Guys, the question is, it is up on you to decide of which leg you want to take the retracement of which leg you want to apply the retracement tool on. So it is entirely your choice. Now guys, if I want to see the retracement of this leg, all of this, so I need to start from here and it ends here. Understand guys? Retracement of this. Do you guys understand? If I want to see the retracement of all of this, that how much the price can retrace of this last move, the whole move of this whole leg, I will start from where I want to, from where the leg begins and where the leg ends. You understand guys? So it's entirely your choice of which leg you want to take the retracement. So guys, erase the confusion out of your mind. It is totally your choice on which you want to apply the tool and take out the retracement. Understand guys? You might want to take a retracement of this small, like move from here to here. If the price retraces, how much she can retrace, so then you will begin your tool from here, A, and that is the end, beginning at the end. Do you understand? Does it clarity. I want to erase the confusion, the question, where do I start? It's not about where do you start. It is about of which leg you want to take the retracement. Make sense, guys? Say yes if you understand. Let's say if you've got this move to the downside. If I want to take a retracement of this move, I will start my leg from here and it ends here. Make sense, guys? Identification of the leg is extremely important. It is your choice of which leg you want to take out the retracement. It is not like it has to start from a specific level, specific uh, point. That's wrong. It is upon you on which leg you want to take the retracement of which move you want to take see the retracement levels of. Understand, guys? Completely say yes if you understand. For instance, if I want if there is a price move from this level to this level, I want to see how much the price can go up, retrace, possible retracement. I will just, this is the leg then. If the price moves from this level to this level, I want to see the possible retracement of this. I will apply this. If I want to see the price retracement from this level to this level, it is my choice. It is my choice. It's nobody's choice. It is my choice. Do you understand the difference? How do you apply for it? It is your choice to decide of which leg you want to take out the retracement. Understand? If everybody understands, say yes. Yes, my choice, my choice. Boston, Khan, Manish, Zain. So raise your confusion from your mind that you have to start from a specific point and end at a specific point. That bullshit, guys. It is you who has to decide of which leg you want to take a retracement, what of which levels, of which move. There is a move, leg is a move, of which move you want to take out the retracement levels. Understand, guys? So let's apply this and see. Guys, if I want to take the retracement of this whole leg, of this whole move leg, starting from here till here, take out the retracement tool, start from the bottom where it begins and ends where it ends. That's simple. Everybody knows this, right? And this gives you the retracement levels. These are the levels, retracement levels. This is all retracement zone. This is whole retracement zones. Or it just give you the levels so that you can see at which stage of retracement the price is at. Understand, guys? Understand, guys? Okay, great. Let's apply more. Let me give you another example of this. I need full clarity from you guys, full understanding. I'm going very slow so that you completely understand this, guys. Let's say if I want to take the retracement, it's me, my choices. So if I want to see how much the price can retrace of this leg, it is my choice, right? Nobody else's choice. Take the tool from the bottom to the top. So of this leg, so far the price has retraced to this level. Makes sense? We will discuss levels in a second. I'm just trying to explain you. Of this move, the price has retraced 88% of this move. The price has retraced 88% of this move, right? This is 50% of this move. This is 38.2% of this move. This is 100% of this move. Makes sense? Does it make sense? Clarity, bring clarity, right? Bring clarity, right? You understand what it is? These numbers are percentage of this leg. So what 50% means? 50% of this leg, the price retraces, came back. This is 50% level, half journey. This is 78.6% of this leg. This is 100% means full, complete journey of the previous leg, of the leg, complete journey. Can you see this? 100% is where the leg begins, right? Completely understand. Are we clear on this? Say 100%, then I'll move forward. Everybody, Zen, Khudayar. I'm trying very hard, guys. Stay with me and please understand what I'm teaching you. I can't teach this again and again. Trust me. I am really, it's not easy. Appreciate that, please. Now, let's go back. Now, try to try to understand Fibonacci. Now, guys, if this is the leg, you take out retracement levels. Guys, what now? Try to understand this. Okay, guys, now try to understand this. What does these numbers mean? These numbers are, this is 100%. This is from zero, scale 0 to 1, right? 0 to 100. And these numbers tells you where the journey is. 50% is half mark of this leg, right? If the price, this level is 38.2% of this leg, all of this leg. 100% is 100% means full journey of this leg. 88.6 means price is at 88.6% of this leg. 78% of this leg. 61.8% of this leg. 50% half mark of this leg. Do you understand what these numbers means, guys? Try to understand the reasoning. This is common sense, guys. These numbers tell you the percentage of the price it has traveled off the leg. Understand, guys? This is 50% of this whole leg, 78.6% of this whole leg. Are we clear on this 100%, guys? Now you apply this tool and then you see if the price comes at 50% and stops here and goes up, you say this interpretation is this. Look, without this tool, you cannot tell me that how much the price has retraced of this leg, how much the price has retraced from of this leg, right? But if you apply this tool, guys, you can see that the price has retraced 50% of this leg, right? Do you understand why do you use this tool? Do you understand this tool? Without this tool, it doesn't matter. We can see still the retracement, but we won't be able to pinpoint exact percentage distance travel off the leg, and that's what we need. So if the price travels 60 here and then bounce up, I can apply this tool and say and see that the price has traveled 78% of this leg and then reverse. So I know exactly at what level the price has retraced off the leg. Understand, guys? Completely understand. Say yes if you guys completely understand, please. Okay. Try to clear your understanding. Get used to associated with this tool, inside out. Okay, now guys. So this is what the Fibonacci retracement tool is, and this is why this is the reason why we use this tool. So guys, any questions? You should be clear on two objectives: what the Fibonacci retracement tool is, and why do we apply this tool? We apply this tool to see the retracement of the legs of the earlier move, retracement of the retracement levels of the move. That is it. Any questions of our guys? Any questions? Because I've finished the Fibonacci retracement right now. I'm starting another new topic. Any questions? Boston, Khudayar? No. Okay, the next question is relationship of price and fib levels and retracement levels. Guys, this is the next topic. What it is, retracement, relationship of the price and retracement levels. Understand, guys? This is the next topic. Understand? Everybody understand? Okay. This is your Fibonacci. This is the tool you have applied. Now, these are your retracement levels, and that is the tool you applied on this leg, guys. Right now, you need to understand and learn the relationship of price action with the Fibonacci retracement tools, guys. Levels for the Fibonacci retracement levels. These are the levels, guys. 50%, 61.8, 78.6, 88.6. Please have these levels set up on your Fibonacci retracement tool, guys. I'm sure all of you know exactly how to do this, right? Okay, guys, first of all, you need to have a pen and pencil to write down the relationship, the price action's relationship, the characteristics of price action when it comes to Fibonacci retracement levels. This is what exactly the price does. That is exactly what the price does, because that is the price nature. The way I said, the price moves between support and resistance, right? The price cannot live without support and resistance. That is the price nature. Now I'm going to tell you the price nature. Normal observed price nature by the stock market participant from over the years. And that's what I'm going to tell you now, which is in relation to these Fibonacci retracement levels. Understand? Everybody's with me? Nice, nice, great, great. Okay. Now, guys, when the price starts its journey, it starts from 0%, right? Number one, to say retracement move has started, which is impulsive move has started, right? Guys, remember, for a retracement move has started, not touch, price has to breach 23.6, rule number one. Yes, price has to break 23.6. You understand, guys? Then you can say the retracement of the leg has started. The retracement move has started. That is when we say impulsive move has started. Understand? These topics are very important when you are using Elliott wave, guys. Without this basics, you cannot trade Elliott wave. People doesn't even know Elliott wave, honestly. Nobody knows every Elliott wave. The way you've seen Elliott waves people applying at least on FIP is bullshit. Bollocks. I will teach you that later if you want to learn this. But right now you need to focus on this. Guys, remember, understand the essence, the reality, the core, the rationality. Now, number one, we are talking about impulsive move route, retracement move, right? Now the question is, when does it trigger? Does it trigger straight away from here? No. It only triggers when the price breaches 23.6 and closes below it. Make sense, guys? I'm not gonna bring this yet. Okay. So rule number one is the retracement moves only starts when the price breaches 23.6 Fibonacci. Understand, if it does not breach and it holds here, found support here, guys, for instance, then the price will go to the upside, right? Right? Means impulsive move hasn't started, guys, yet. It hasn't started. It hasn't started. All what happened was the price found support in 23.6 and went to the upside. So if you want to take an impulsive trade, a retracement move, the trade normally triggers when the price breaks 23.6. That is where your entry has to be. The rule number one, guys. Normally, general rule number one. If the price finds a support, he will go straight away to the upside, guys. Exit the trade straight away. Make sense what I said? Make sense? Okay, great. Now, the price can retrace to 38.2 Fibonacci, guys. If the price finds support and retraces to only 38.2 Fibonacci, guys, this is the price behavior. The price moves. If the price finds support at 38.2 Fibonacci, guys, remember the price will very aggressively move away from it. Make sense, guys? The move from 38.2 Fibonacci will be aggressive, guys. Remember. These are the characteristics of the price action, guys. So just remember, they never changes. Normally, they never changes. Understand, guys? If the price rejects at 38.2, guys, the retrace rejects, the move will be very quick from there to the opposite direction. Now the question is the reasoning. Guys, it means the institutions does not want does not want to take the profits, to take out the to take the profits on the retracement move. Hence, they want continuation to the upside, and hence they straight away inject the money in and move the price away from 38.2 to the upside. So they don't want the retracement move to continue to the downside. Make sense, guys? This rejection and quick movement to the opposite side is indication that institutions does not want the retracements to take place. Hence, they enter and quickly move the price to the upside. Makes sense? So remember, the point you have to take out of this is this, guys. You're understanding the relationship of price action and retracement level. The price reacts from 38.2 very aggressively, and that is what you need to write in your books. Understand, guys? 50% is not a significant level, guys. It is not a significant level normally. Certain pairs react to 50%. Euro US dollar legs always likes 50% retracement. The traders, the institutional traders who trade Euro US dollar, they like to take they like the price action. They like to bring the price to 50% retracement of the legs on Euro US dollar and then inject the money to move the price away. So 50% is an important level when you're trading pairs like Euro US dollar, but normally it's not a significant level. Understand, guys? Okay. Now, guys, the price can come to 50% and move away. Movement from 50% to the upside, if it finds support, guys, will be normal, not aggressive, normal. Then the price can retrace and comes to 61.8 Fibonacci, guys. Now, this is a golden ratio, guys. We call it a golden ratio. The reason is this. Guys, remember, if the institutional traders trigger a retracement move, right? They like the price. They want to take the profits of that move. They want to book the majority profits of that move at 61.8 Fibonacci level. Hence, 61. Whenever there is a retracement move, most of the time you will see the price approaching 61.8 Fibonacci because institutions move the price at 61.8 Fibonacci retracement of the leg, and that is where they book their profit taking. Understand, guys? Understand, guys? They of what does the profit taking means? Of the retracement move, the money they had injected on that retracement move, they take out the profits. They take out the profits at 61.8 Fibonacci. Are you guys clearly understand what I said? So you need to know exactly why does always the price comes at 61.8 Fibonacci most of the time. Remember, whenever the institution started an impulsive move, a retracement move, they always try to bring the price to 61.8 because that is where they want. At that level, they always like to book their profit, guys. Exactly. This is the level. This is the retracement level that normally institutions like to book their profits, like to take out their profits. And hence, 61.8 is a golden ratio. Mark this. Whenever you have a retracement move, the classic retracement move, you will see the price will reject at 61.8. Because why it will reject? They will do the profit taking there. Make sense? Are we clear on this, guys? Come on. Everybody say Boston, Khan, Zain, Khudayar. Are you guys clear? We are trying to learn the nature of the price action when it comes to retracement levels. And again, guys, the next one. The price can come, guys, when the price rejects at 61.8, the movement to the upside is normal, guys. It's normal movement, right? Normal movement, guys. The price can also come at 78.6 and 88.6, guys, either on them or in between, guys. Okay, price can reject and move to the upside. This movement to the upside will be very slow, guys. Understand? Just mark this. Rejection at from 78.6 and 88.6 will be very slow in nature, guys. Understand? Do you understand, guys? Okay. Somebody asked a question. Let me see what the question is. 38.2 is extremely aggressive. What does 38.2 means? The banks does not want to book to take out their profit, doesn't want to take the profits. Hence, they straight away move the price away from that level. Make sense? 50 is normally not an attractive level. 61.8 is a classic retracement level where the institutions take out their profits. So they like to book the profits of the retracement move normally at 61.8, and most of the time when the remember what does I mean? What does I mean by bank taking profits? By bank taking profit means the price will reject from that level, guys. Understand? The previous move will stop, the retracement will stop there. The banks will book their profit, and another money will be injected, new money will be injected for the new leg to start. Make sense, guys? Say yes if it does make sense. Okay, 68 and 88.6 are slow levels. The market reacts from these levels, and movement retracement after the rejection, the move to the upside will be slow, guys. So you guys understand the relationship of price and the retracement levels, guys. Say yes if you understand. Everybody say yes completely if you guys understand. We have completed 1 hour. I think we will stay another half an hour. That is it. You're almost there, guys. Stay with me. Okay, guys, try to understand another thing. Retracement. Sometimes the price retraces all the way to 100%, guys. If the price retraces all the way to 100%, the price movement to the upside will be extremely slow, guys. Just write it down. Extremely slow. Extremely slow. Understand, guys? Extremely slow. This tool we only use to see how much the price can retrace, how much the price can retrace off the leg. So retracement, remember, if the price, now remember what I'm saying is very important. If the price breaches 100%, guys. So guys, if the price breaches 100%, and if the price rejects at 100% and continue to the upside, reject and go to the upside. Remember, they are two different things. Now see this, guys. This is your move from A to B, right? Yes, wicks from where it starts. Normally, the leg starts from the wick. Look, this leg start from the wick, this wick to this wick, right? Makes sense? Gerard, do you understand this? Okay. Now, guys, remember, if there is a retracement move of the previous leg, the trend, look, just write it down what I'm saying. If there is a very important, if there is a retracement of a leg, the next move, if there is a retracement of the leg, guys, remember what I'm saying, guys. Just see, very important what I'm saying. The next move will be continuation move, guys, and continuation. Guys, do you understand what it means? Just try to focus what it means. If there is a retracement of a leg, the next move will be trend continuation of the previous leg. Make sense, guys? Tell me by saying yes if everybody understand what I've written there. I'll discuss on this in a second, but tell me first if you understand what I've written there. Everybody understand what I've written there, guys. It is very important you understand what I've written there, guys. Very important. I'm going to show you now. It is very important. So if there is a trend continuation, it will always be a retracement move, guys. So if there is a retracement move, it means the previous trend is valid. Understand, guys, what it means? Automatically, what it means, the previous trend is valid if there is a successful retracement move. Understand, guys? Now see. Guys, this is a move from This is a move, right? If there is a retracement move, remember, this means the trend is intact, because automatically the price will make what? Higher low, guys. Make sense? Even if it is 100% retracement, we consider that as higher low, guys, unless the price breaches the previous low. Make sense, guys? So anywhere the price stops, it is a higher low, guys, and it is considered to be continuation move to the upside. Continuation move, guys. Understand? You guys understand, right? Okay. So now the question arises, why do we use the retracement tool? We can use the retracement tool, guys. We can use the retracement tool to take to seek the continuation trades, guys. Do you understand? The retracement tool is used to seek the continuation trade, trend continuation trade, guys. Do you understand what I mean? What I said? Retracement tool is used to take the trend continuation trade. Retracement tool is used to take the trend continuation trade, guys. How? Just see this. If the price rejects here, you can take an entry on this 61.8 Fibonacci further to the upside, so you will stay within the trend. Trend continuation moves, guys. Understand? You need to be very clear on this. Why do you use the retracement tool, guys? To check, to seek out the trend continuation trade, guys. And remember, if the retracement fails, where does the retracement fails? If the price, I'm gonna say it again, if the price breaches 100%, the retracement fails, guys. Retracement fails means there is no trend continuation, guys. The trend has changed. Simple rule, guys. Remember this. Do you guys understand what I said? Do you guys understand what I said, guys? If the retracement fails, if the price breaches 100% of the leg, it means there is no, the retracement leg has failed, right? The retracement leg has failed. Retracement beyond 100% is not a valid retracement. It is not a retracement anymore. It is trend change. It is a trend in the trend. Understand, guys? More than 100% retracement is the change in the trend, not continuation. It's a called reversal, not continuation. Understand? Just write it down, guys. So guys, it's very simple. Let's say if the price breaches 100% and came here, as long as the price remains below 100%, guys, the trend has changed into a sell, right? And if it remains above, it is always a buy based on the previous trend, guys. And say if our trend was buy trend. Do you guys understand the zones? Do you understand the zones, guys? Do you understand? You can use Fibonacci retracement tool to stay within the trend and trade the bloody trend. Do you understand, guys? And you will exactly know where to exit your trade based where exactly the trend changes. Make sense? If it makes sense, say yes, guys. Forget the bloody concepts of lower highs, higher lows, lower highs, whatever. That is all confusion, bullshit, bullocks. Just understand this, what I'm teaching you right now, guys. Do you guys understand? So I would advise you to use the retracement tool to seek trend continuation trade, guys. It's easy. It's easy. And simply remember, if the price retraces more than 100%, simple. Trend has changed. Exit your trend trades. Exit your trend trades. Simple. You understand what I said? It's very simple what I said. As long as the price remains within 100, keep on buying the previous trend. Keep on stay within the previous trend. Once the price reaches 100%, guys, exit the trend trade. The trend has changed. Everybody understand? 100%? 100% if you guys understand. Khan, Boston, Khudayar, do you understand Khudayar completely this? Khudayar, do you completely understand? Khudayar, do you completely understand? Khudayar. I can't see if Khudayar said yes. I don't know if he's here. Okay, let's see if he's Khudayar, do you understand? I think he's not here. Let me see. No, he's not here. I think he's got disconnected, but it doesn't matter because obviously I've got a recording of this. So, guys, do you understand the Fibonacci retracement tool? Everybody understand? Okay, now I'm going to show you how to take the trades using this tool, guys. Let me give you an example. First, if the trend is the buy trend, the price was at support, guys. The price rises. Now the price rises, guys. Let's say you missed your entry at the support level, right? And you want to jump into the trend. Remember, what did I say? You use the retracement tool to take the trend continuation trades, right? Right, sirs? Right, sirs and madams, right? Agree? So now you need to know exactly why to use this tool. If you don't know how to use this tool, there is no point in using this tool, bloody tool. So all I need to now use this, I wanted to enter into the trade, which I already missed from the first point of support, right? Now, how would I enter? How should I enter? Just first identify the leg. Let's say this is the leg. Mark your retracement tool on it. Understand, guys? Guys, remember the bottom line is this. This will remain a buying trend. Buying trend. The price will continue going to the upside. Bottom line, if the price does not reach its low, common sense, right? Which is also 100% retracement. So you guys exactly know, as long as the price remains above this on this level, this is a buying trend. Understand, guys? First of all, so we know exactly by using this tool where the trend changes. Yes or no? Yes or no, guys? You know exactly using this tool where the bloody trend changes, which is the most important thing, guys, if you are a swing trader, because the retracement tool is normally used by the swing traders to suck the blood out of that leg, out of that trend, to suck the complete blood out of that trend, guys, because swing traders wanted to stay where and wanted to enter where the trend begins and wanted to leave where the trend ends. Yes. Now, guys, this is the bottom line. Now, so take the trend continuation trade. When the price rejected, all you need is to wait for the price reject at certain any specific retracement level, guys. It can reject at 23.6, 38.2, guys, 61.8 Fibonacci, 78.6 Fibonacci, 88.6 Fibonacci, or even 100. At any point, if the price rejects, 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 you can take a continuation trade, guys. Do you understand? Continuation trade, guys. So, guys, remember the leg is always I'm establishing on expansions for the next lecture. Leg is also this is base for your harmonic understanding and Elliott wave understanding. This is the leg is called from where the point from where the leg begins is called A, and where it ends is called B, right? Where the retracement of that leg finishes, we call it point C. You understand, guys? Do you guys understand? And C can be on any retracement level, guys. C will be valid and will be C if the price retraces within 100%. If the price fails, breaches 100%, there is no C. Why there is no C? Because there is no retracement. The retracement has failed. Make sense? Make sense, guys? Have you ever seen a C point C if the price breaches 100%? No. So that what does the law says? If the price breaches A, there is no C. Common sense. Make sense? So does it not make sense combining all other topics that you have been trading and learning? But the point is you need to understand the core and essence of it. Yes? So guys, C will always remain valid. C will always be valid if the price rejects above 100, guys. Understand this. There will be no C, there will be no retracement if the price breaches 100%, guys. Remember. Give me a minute. Give me a minute, guys. I'm just sending somebody a message. Okay, guys, now. Yes, exactly. This is what I'm saying. Your love is right in front of you, but you never realize her. Realize her. That is where the problem lies. And you're looking on the other side, other places. Instead, Susan is standing right in front of you. You don't even look at Susan. Instead, you're looking, trying to find Susan in Sharon, in Elizabeth, or in Liz, for instance. This is what we call blindness. Okay, guys, let's be serious. Actually, this is a very serious topic, guys. I hope you're enjoying this. Trust me, if anybody ever give you a lecture like this, I will shave my head. I won't even hesitate for a second because nobody had given me a lecture like this yet since my trading journey commenced. Zan, you're enjoying this. Okay, guys, so let's continue with this. So remember the C point, the C. Whenever there is a C, it will always be between 0% and 100%. Remember. And if there is a valid C point, guys, then it means the trend is intact and you can always take a trend trade from point C, guys. Now, guys, remember I'm discussing here to take a trend continuation trade, right? Trend continuation trade. Understand, guys? So your trade is this. You need to be clear what trade you are taking, guys. Trend continuation, which is C to D, guys. Because remember, where this continuation ends, that is called point D. Understand, guys? So we are discussing this. This is trade number one. Understand, guys? Yeah, C to D, which is called trend continuation trade. So if I say take a CD trade, it means trend continuation trade. This is a stock market language, guys. CD trade, trend continuation trade. Make sense? CD will always be trend continuation trade. It can never be trend reversal trade. Make sense, guys? Understand? Common sense. I explained you the reason. I show you the bloody reason here. Yes? Now, just write down these points which I'm going to teach you. You need to be clear before you enter the market which trade you are taking, what kind of trade you are going to take. Is it a trend continuation trade or trend reversal trade? You need to be very clear psychologically, mentally, objectively, clear objectives. Understand? Now see, for the trend continuation trade, which is CD using retracement tool, right? What you need to see, guys. Guys, this is what you need to see. When the price is coming to the downside, you need to see that the price rejects at any retracement level. The price rejects at any retracement levels. Look for price rejection at retracement levels, guys. What does I mean by rejection is in bar, guys, bullish candle or reversal candlesticks pattern. Make sense, guys? Does it make sense, guys, what I said? So, guys, remember, this is your trade C to D. So, how would you take the trade C to D, guys? I'm teaching you this. The price is coming down from B to C, right? All you need to wait and watch this. You have these level marks up. The way I said, mark up your levels. You have already marked. Your objective is only you have to take a straight C to D. Now you're sitting like a sniper. All you need to wait for the price to reject at any of these levels. That's all you need. Understand, guys? That's all you need, and then a reversal pattern, guys. That's all you need. So I'm just sitting like a sniper, looking at these levels and looking at the price coming down. When the price rejects, when the bloody price rejects, when the price rejects a pin bar, a reversal pattern, harami pattern, hammer, the bullish trend, hammer, all bullish patterns, hammer, engulfing pattern, harami patterns, morning stars. When you see those rejection patterns on any of these retracement levels, that is where your entry is. Understand, guys? You understand exactly. The rule of the entry will be exactly as I said in lecture 2, guys. So if you follow the rules of the lecture 2 when I say entry, but all I'm trying to say is you will be sitting like a sniper waiting for the price to come to these levels, rejects, test and rejects and reversal level. You see the reversal candlestick in a bullish trend. You want to see a bullish reversal candlestick. In a bearish trend, you want to see the bearish reversal candlesticks patterns. Understand, guys, completely. So when you're taking this trade, your mindset has to be clear, not confused. Understand? 100%. Everybody understand? 100%. This is for the trade CD is trend continuation trade. Understand, guys? Everybody say big yes if you understand. Okay. Understand this. Okay, now guys. Now guys, a lot of people doesn't a lot of people are greedy traders. Now, first I told you guys to trade with the trend, right? I told you guys to trade with the trend. That is stage one. But what if somebody is successfully trading with the trend, and he wanted to take counter trend trades also, guys. So now I'm going to teach you guys. Remember, the price moves in legs. The price moves in legs. The price moves in legs. There will be just two possibilities: continuation or reversal. Continuation or reversal. Now this is how the price moves, guys. There's just two ways the price moves: continuation, a leg, BC, continuation, right? And reversal is this: a leg, no conti. This is called reversal trade. Make sense, guys? Make sense, guys? This is called reversal trade. That is a continuation trade. There is no third trade we have in our books of stock market. Understand? There is no third trade. Agree? Everybody agrees, right? So let's focus now. Come back. What if you want to take a trade which is called BC, of leg BC? Trade of BC, guys. So when you're taking a trade of BC, obviously you can take, because you know there will be a B and a C, right? Once B is established, you can take a trade of B and C. From B to C, you can take a trade, but the rules will have to be absolutely clear. When you're sitting like a sniper, having a gun in your hand, you need to have a clear objectives, what you're looking for, how you're approaching that target. Understand? I'm going to show you exactly. Everybody's with me on this so far. Say yes, everybody's with me then. So BC is what? It's impulse, it's a reversal trade, guys, against the trend. Agreed? We agree on this, right? And remember, it is a risky trade. It is always a risky trade. Counter trade, counter trend trade, exactly. Whatever, reversal trade, whatever you want to say. Now, guys, what I said before for the trade CD, all you need to wait for the price to come down, and all these levels, if you're in a buy trade, these levels will, you wanted them to act as support. Any of them act as support, right? Because you know BC is already a buying trade, right? Because the trend is to the upside. Understand? So your objective is very clear. All you waiting for the price to reject at any of these levels. How would you approach these levels? When you're taking a trade which is BC trade, which is, sorry, C and D trade, guys, you will be looking on these levels as support, guys. In a buying trend, these levels are support, guys. Look, I'm taking these levels as support because the trend is a buying trend. Price is coming down. All I want is that the price finds support on any of these levels. Yes? Yes? Say yes if you understand. Look, I'm taking a trade CD. I have to take a trade CD, right? This is the trade I have to take. So I will assume this is how you approach. The approach and mindset is totally different for both trading trades, right? Just see this. These levels are acting as support, guys. Support in a buying trend. In the buying trend. And when this price is coming down, all I want is the price finds support at any of these levels, right? And that is where my C will be. Understand, guys? This is for a trend continuation trade CD. So my objective will be waiting for the price to reject on these levels, and I'm treating these levels as support in a buying market and resistance in a sell market, sell trend. Understand, guys? Completely. Vice versa, I mean. Understand? Now, guys, I'm going to show you, if you're taking a CD trade, BC trade, BC trade. First of all, your BC trades you always trigger this trade once price breaks 23.6, guys. First of all, rule number one. Understand, guys? That is where it triggers. That is where you take an entry, guys. The price breaks, retest, and that is your entry. Understand, guys? Yes, of course, break and retest. Yes, of course, confirmation. Yes, that's right. Okay. Now, 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 guys, when you're taking a trade BC, always treat these levels as resistance. This is your resistance now, right? And always stay in the trade as long as the price fails to break this resistance. Now, when you will be looking on these levels, you will be looking them as resistance when you're taking a trade B to C. Make sense? Do you understand the difference now? Because this is what's happening, guys. Do you understand, guys? So you want to see these levels as resistance in a buying market, guys. Approach these levels as resistance. That's all you need. You need to you hope that these levels will act as a resistance for the B to C trade. Make sense what I said? Does it make sense, guys? Zen, do you understand? Approach is totally different when you're trading this. BC. When BC, you're treating them as resistance in a buying market. If you take a CD in a buying market, treat them as support, guys, for entry purposes, because remember, you every entry will be at resistance, not as support, right? If you are taking a BC trade, can you see this? The price will come up, find resistance, entry, breaches, come up, find resistance at 38.2, breaches, come up, find resistance at 61.8. These are your entries. Your entries are on resistance, so you will treat the Fibonacci retracement levels at resistance for your entries. Your entries, understand what I said? You're taking a trade B2C on a rising market. You understand, guys? So approach has to be totally different, right? Guys, treat levels at resistance because you enter from resistance to sell in this buying, in this uptrend. Your CD trade is a counter trend trade, guys. Counter trend against the trend trade. So if it is a rising market, BC will be a sell trade. If it is a sell market, BC will be a buying trade. Do you understand this? Then everybody understand this completely. Do you understand the difference difference of approach whilst taking a trade B, C, and C, D? Do you understand this? Guys, it is very important to treat this like this because it is easier for you to exit your trade once the price breaches, once the Fibonacci level fails to act as a resistance, you exit your trade straight away, right? You exit your trade straight away, right? And once the Fibonacci retracement levels act as resistance, you will enter the trade. Whereas in the trade CD, you wanted the Fibonacci levels to act as support, guys. Understand? On the trade BC, you wanted Fibonacci level to act as resistance, guys. Understand, guys? Say yes if you completely understand this, because I'm going to move forward. Say yes. Okay, now I have said all this. The rules to enter the trade. and to exit the trade remains the same, because these Fibonacci levels, when I say treat them as resistance in the trade BC and treat them as support in a trade CD, guys, I'm talking about support and resistance automatically, right? And you know exactly the rules to enter the trade in using support and resistance. Break a retest, break a retest, break a retest. Yes? Are we clear on this? 100%, guys. Say yes, 100%. And Khudayar, do not worry. I've got recording of this. I'll send you the recording. Trust me, you won't even need to ask me a single question. This is very detailed. I've gone. Guys, tell me if you completely understand the retracement tool, because I've finished the principles and application of that tool already now. So the retracement tool can be used to take a trend continuation trade, guys. Understand? And trend continuation trade will always be CD, guys. CD, guys. Understand? CD. BC will be a reversal trade. Reversal trade, guys. You need to be very clear before you take a trade on which trade you're going to enter. If you know exactly which trade you're going to enter, you will be focusing with the perspective of that particular trade. Understand, guys? And did you see totally different perspective on trading both of them? Totally different perspective. Yes? Remember, BC only take when you become successful, consistent trader. BC is always risky, guys. BC is always risky unless the price breaches 100 and the continuation trend has failed, and this has reversal. The reversal has taken place. Then you take a trade. But BC, be very careful, guys. Very careful with BC trade. First, always try to take a trade CD, 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 CD. Understand, guys? And the projections, the CD, what I'm going to introduce you to the projections, expansions, Fibonacci projections and expansions, which you will be learning on Thursday, is we calculate even before the trade, even before the move commence. We calculate even before CD begins by using A, B, and C, how the distance of C to D. Understand, guys? By using projections, we can project leg C to D by using A, B, and C, by using Fibonacci expansion tool, guys. That is the only use of that tool. Understand, guys? We can use Fibonacci expansion tool to project C and D in advance, even before it hasn't commenced, by if we have point A, B, and C. Make sense, guys? Make sense what I said? Make sense what I said? Have your pen and pencil. Mark this ABC. You will understand and follow my lecture. Mark an ABC. See my lecture. You will understand what I'm saying. Are we clear on this, guys, completely? Say 100%, then I'll move forward. Khudayar, Zain, Manish. So you don't have to use this tool all the time on your charts, guys. You only need exactly to catch the trend continuation trade. People just keep on putting these on the charts just for the sake of fashion, bloody fashion, obsessed with them. And then they're moaning that they had losses. Guys, let me check my accounts first. Just give me a minute. Okay, that's nice. Guys, I am in huge profits right now on Euroscad. Okay, let me see. Give me a minute, let me check quickly. Beautiful. Okay, guys, now I'm going to show them practical examples of this. Okay, I'm going to show you quickly the sell side of it. I'm not going to go into detail much, right? So if there is a resistance and the price moves from this resistance to this support, guys, in a sell trade, the move will be from resistance to the support, guys. Understand? This is vice versa, guys. You need to use pen and pencil and practice on your paper this ABCD thing. The retracement of this will be using this tool from A to B. You will have retracement, guys. So I said vice versa, guys. I said vice versa, guys, right? The price rises and rejects at any specific level, that is trade C, point C, right, guys? So if you're taking a trade CD in a in a bearish market, guys, in a bearish market, if you're taking a trade CD, these Fibonacci levels act as resistance. Approach them as resistance, and all you want is the price when it's rising from B to find a resistance at any of these levels, which in turn will give you an entry. Makes sense? Makes sense? Vice versa, guys. Okay, great. Now, if you're taking a trade BC in a bearish market, guys, if you're taking a trade BC in a bearish market, guys, you will treat these levels as support, guys. Exactly. Excellent, Gerard. Excellent, excellent, excellent. And the BC will only trigger when the price breaches 23.6 and start closing above it. Understand? And it will only remain valid unless the price remains within 100%. Understand, guys? Are we clear on this? Say yes if you guys understand, please. Zen, you understand? You need look. Let me tell you, watching this webinar is not enough. Have a pen and pencil and try on your paper. Try on your paper. You need to digest this bloody concept in your mind by using pen and paper. Have a feel of it. You know how you learn harmonic patterns? You need to keep on drawing them on the paper, not on the computer, on the paper with the pen and pencil. Then you memorize them. Understand? Have a feel of them. If the price breaks 100%, it's no more a trend continuation trade. In fact, this trend was bearish. Now this is bullish trend, guys. So this is your buy zone now. Does it not make sense, guys? Exactly, vice versa. Same concept, opposite, but try on your charts with the pen and pencil. Try them. You need to memorize them. Memorize them. Can you not see to stay within the trend how the retracement tool helps you guys? You don't even need that bloody higher highs, lower highs bullshit stuff, right? I gave you so many ammunition to trade with the trend. I gave you tracks, the channels, right? I gave you channels. Today I gave you Fibonacci retracement tool, guys. Can you tell me? Imagine you combining those bloody tools together. You will have like a atom bomb, atomic bomb sort of thing, not a machine gun anymore. Trust me, you will destroy the world like I'm sure that Trump will in the coming years ahead. Make sense, guys? Everybody understand completely this? If Boston Khan, you guys understand and tell me, did you guys enjoy it today? Okay. Lorenzo looks happy. Mamma mia, mamma mia. Okay. I didn't sleep all night, but normally this is my day actually, so it's fine, I think. Okay, Manish, you understand this? Rico teaches you this. Trust me, this is worth, I've said, what did I say to you guys? This is worth attending this lecture. Trust me, you would regret not attending this lecture today. Okay, guys, now let's take few examples before I finish this lecture, guys. I'm just gonna show you some examples, and that is it, guys. So, guys, imagine this is your leg. This is the leg you want to take the retracement off. If this is the leg you want to take the retracement off. This is your point A, that is your point B. Take the tool where it begins, where it ends. Understand, guys? So this is your trade A. That's B. Guys, tell me which trade is going on right now. If you're in the trade, which trade would be? Which trade is this to the downside? Retracement. Which trade would it be? B, C, or C, D? Counter trend, exactly. So you are waiting for C to establish. Understand, guys, if the price remains above 100 and C is established, guys, as long as the price remains above 100 and C is established, then it's a trend continuation trade. Understand, guys? If the price breaks this, then the trend has changed. So the buy trend has changed once the price breaks this level. Make sense, guys? So you exactly know how long and how far the trend lasts. Everybody understand? So the first thing is you know exactly the boundaries of the trend, first of all, and now this. Now let's see this. For the BC trade, guys, the price is coming down. Price rejected 23.6. Right, guys? Found resistance. What did I say? For BC, treat these levels as possible resistance levels, right, guys? In the rising market. Understand, guys? Just treat them as a resistance. That is your entry to the downside. You're just selling. You sell from resistance, right? So you are treating these levels as resistance. That is it. Make sense, guys? Are we clear on this? Are we clear on this, guys? Say. So this is your trade BC, guys. Example of BC. How would you approach BC? Make sense? Now let's say if you want to take a trade CD, guys. Then, guys, when the price is coming down, all you want the price to found a support as at a certain level. At a certain level. Once the price find a support, guys, you can enter into a buy trade. Make sense, guys? So the approach has to be different, has to be totally different, guys. Understand? Look, to be a successful trader using Fibonacci retracement tool, you have to be very clear. Either you're taking a BC trade or a CD trade, and you approach that very carefully. Make sense? Make sense, guys? You have to be clear, you're taking a BC or a CD trade. The approach is totally different in both of them. Both of them. Now, guys, see the beauty of this. If it is a trend continuation trade, trust me, the price will respect the Fibonacci levels. This is the leg. Let's say you missed an entry here, right? You missed an entry. Now this is the leg. The price started retracing. You want to enter into the direction of the trend. All you need is Fibonacci retracement tool and wait for the price to come back and rejects at any. What did I say? Now we are waiting to take a CD trade, right? All I want these levels to act as resistance. The price rising, I wanted to see the price rejects from any of these resistance levels. The price rejected at this resistance. See 61.8 Fibonacci, guys, right? See, guys, right? That is where you'll enter. Make sense, guys? This is your CD trade, guys. So my approach is, if I want to trade with the trend, I will be sitting and waiting for the price to reject from these Fibonacci levels like a sniper. Like a sniper. No, I'm not a confused person. I'm a sniper. Right? Boom. Make sense? Say you understand this. Now, just see, I'm going to show you the price, the trade BC, guys. Let's say the price find a support. You want to take a BC trade, for instance. Remember, it will be short trade. It can be very short trade. It can reject from 38.2, the first 61.8 Fibonacci. Normally rejects 80% from 61.8 Fibonacci. Remember, because it's a counter trend trade. Remember what I said. You want these Fibonacci levels to act as support, guys, right? If it's act as support, that is what you need to enter. So if you want these levels to act as support, the moment any of these levels act as resistance, exit your trade straight away. So your approach has to be different, right? You understand how you approach it. You understand how you should approach it. This is a counter trend trade. Remember, it will be short-lived, risky, because it can reject from 38.2. It can reject from 61.8 Fibonacci. Normally, we remember the price relation. The price normally rejects from 68.1 Fibonacci most of the time because banks likes to take the profit taking. If this is a trend continuation trade, guys, understand, if this is not a trend continuation trade, trust me, the market will eventually continue to the upside. Make sense, guys? So you have to be clear, either you're taking a BC or a CD. Be very clear, my friends. Be very clear. Be very clear. How beautiful is this? Look, the market has been in a downtrend, right? All the way, right? So I'm going to show you the beauty of this. This is the leg. Let's apply this. The price rejected at 61.8 Fibonacci, right? Agreed? That's your entry. Now, let's remove this. This is the next leg, right? Agree? Everybody agrees? The price rises. If it is an overall trend, see what? Rejected from 88.6 and 78.6, right, guys? Agreed? Okay, good. See again. Now this is the leg, right? Right, guys? If I miss this, I want to enter. And if it is continuing to the downside, very simple. Rejects from 88.6, guys. Can you see this? It is every time rejecting from under Fibonacci 100 because this is bloody downtrend, guys. Do you see? This is a bloody downtrend. That is why. at any stage, if the price has not has rejected from has not respected 100, the trend might have changed. Make sense? So within this trend, I can use Fibonacci on each leg to keep on enter. Make sense, guys? Let me give you a buying. Does everybody understand this? Say yes if everybody understood this. Manish, Khudayar, Amani, Zain, Lorenzo, Khan, Boston, Zain, Gerard. This is an uptrend, right? So say you missed an entry on this. The price gone up. Now you wanted to enter. If it is an uptrend, that is your leg. Take out the retracement. See the price rejected. See? Make sense? So you can re-enter into the direction of the trend. Understand? Everybody understand? Okay. Let's move forward. Now see this. Right? That's your entry, guys. Understand, guys? Do you guys understand? If this is your leg, as long as the price is not breaching this 100%, it was the buy trade here. It was the buy trade, guys. You see this, the price rises, rejected at 61.8 Fibonacci, you would have bought it. But then what happened? The price found this resistance, guys. So see, this is the leg, the price, this is the leg, right? The price came down, found this 61, that is your buy trade, guys, again. Make sense, guys? Obviously, the price make a double top, you will exit your trade straight away here. But do you understand this? Yes. Han, just give me a minute, man. Let me finish this first. Let me finish this example first, because if somebody watching the video, he won't enjoy if I break down. This is the leg. If it is a trend continuation trade, the price will respect hundreds. Did you see the price has breached on this instant, right? Did you see the price has breached on this instant? Hence, the buying has stopped. Make sense? And see what happens. The trend has changed to the downside. Can you see this? So it's so easy to exit your trade once the bloody trend changes. Is everybody clear on this, guys? I want you to try this on your charts. Do this exercise. Try to take CD trade. Try to take BC trades, CD trades, BC trades. Practice, 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 practice. Trust me, you do this practice with the clear objectives, the sort of trade you're taking. When you go back on the live charts, guys, trust me, you will be a killer trader. You will have never fear that you will not are trading against the trend. You will always exactly know when to exit, when does the trend fails, when does the new trend begins. You will exactly know. You will be in control, right? Market will never played you out. You will have losses. You will have very small losses because you know the boundaries of the market. When does the market just jumps out of the wall and enter into another plot? Make sense, guys? Everybody understands? Everybody understand, guys? Tell me if everybody understand, please. Okay, guys, this is almost 2 hours long lecture. Now I will take questions if anybody has, but has to be a wise question, guys. I don't want to hear any bullshit questions. Honestly, I don't have stamina right now. Just give me a minute, guys. Okay, whoever has a question, please speak up. Speak up. Whoever has a question, speak up. Come on.
Hey, Waka, I do.
Who's this?
Con.
Khan. Yeah, go on.
It's late night. Hey, so if you want to do a live trade, like right now, right, you want to do from point A to point B, like on that graph right now, would you have to wait until you see like a reverse candle to go up like that in order to see the next point?
Look, if I look, let me show you. Just a minute. Look, if this is the leg, right?
Right,
And there is a possibility of reversal. Your reversal will be when you see something bullish here, right?
right.
Look, let me give you an example. If that was the leg, how would you decide where the leg ends? Because you're seeing this candlestick's rejection. Otherwise, the leg might continue to the downside. Make sense? So where the leg ends is where the price starts rejecting. So price had started rejecting. And for instance, if you're trading this as a normal trader, the price has breached this and price is now staying here, right? So
Yes.
there's a possibility that the price is going to rise. Only then there is a retracement lag. So simple, you just take this and then this is your B, C and C. Now the question you ask me is currently what is the position? Okay, I will mark this, but I want to see a reversal pattern, sort of bullish bulls entering into the market here before I can assume this is my point B. Makes sense? I can make this right now. It does not matter. If the price breaches zero, it fails. The B fails. B is not valid yet, right? So B is
Right,
valid when the price start rejecting. See this. The price start rejecting like this, and I'll see the momentum price is picking break. It breaches the support level. Then I say okay. So you will always amend this if when the leg is established, you will see a clear leg, and the leg normally will always have started moving like this to the upside. Make sense?
okay.
So then you just apply your Fibonacci retracement and exactly target. Normally I suggest target CD trade, not BC trade. BC trade is risky at times because of the same reason. If you want to take a BC trade, you can take a trade after the price breaches 23.6. This is why I said when you take a BC trade, it triggers the retracement trades trigger when the price enter into 23.6. Understand? When the price enter, well, that is my BC trade, guys. Make sense? But remember, BC trade can be very short-lived because it's a retracement trade. It might end at 61. Normally, because of the price action, we know it normally likes to end at 61.8 Fibonacci. So you can always take a trade from 23 to 61.8 Fibonacci. On higher time frames, it's a couple of hundred pips. Make sense? Yes? Does it make sense? Speak up, speak up, speak up, speak up. I can't see what you're writing. So speak up, please.
Yes, makes sense.
Yeah, exactly. So you need to wait for the point B to be established. How does it establishes when you will see a reversal, when you see a reversal. Therefore, the wise man said, just wait for the price to break 23.6, then you enter into the BC trade, guys. You can enter before if you see a double bottom here. You can enter before. You can take a risk. You can take a chance. But what if the price finds resistance at 23.6 and go to the downside? Make sense what I'm saying? To be careful, obviously, you wanted to ideally enter at 23.6. Otherwise, if you see double bottoms here, bullish engulfing candlesticks, entry will be the same normal way you enter. And this is likely to be your point B. and then you straight away put your retracement levels, and you will automatically know when the price enter into that 23.6, retracement has commenced. Understand? Say yes if you guys
Yes,
understand.
yes. Yes.
Anybody has any other question, please speak up, speak up, speak up.
Yes, yes. Wakwa, you hear me?
Yeah.
Okay. Yeah. Question for you here. Question for you, Wakwa. Basically, so now it's safe for entering for BC. It after when you reach over 23.6 and retest, and then after that, and we start the entering from B and C. Right? Correct?
That is correct. This is the ideal 23.6 and ideal. You can also enter here after you see double bottoms, bullish engulfing, but entering on these levels before 23.6 can be risky, because what if the price find resistance at 23.6? Then your risk reward is not good. You will straight away will be triggered out of the trade. So you have to be very vigilant and very careful. And I suggest is, if you're taking BC, try to take BC from 23.6, but with experience, yes, you can take BC from the base 0%. If you see double bottoms here, bullish engulfing candle, bullish entering into the market, yes. So yes, you can take the trade, but ideally the best trade is as at 23.6. Guys, I'm going to stop the recording. This is the end of the lecture 4, Fibonacci retracement part 1. Fibonacci expansion will be on Thursday at 6 a.m. United Kingdom time, guys. I hope you enjoy the lecture. Please watch this lecture recordings 5 times. Have pen and pencil with you guys, paper, and try to draw what I'm teaching you and try to understand. Give it a thought. Trust me, with using the correct way, in the correct manner, the Fibonacci retracement tool, you will become a profitable trader, a successful trader, guys. Understand? Everybody understand? Say yes.
Yes. Understand.
Great. Thank you very much, guys.